welcome to ERPfixers Webcast 2020 series. Today is April 20th, 2020, and we're going to be learning about important design and configuration changes in controlling with S/4HANA. Today, our host, Ashish Sampat, will be joining us.
Hello, everyone.
Go ahead to the next slide, Ashish.
Okay, sure.
All right. So before we go and get started, I wanted to talk to you guys a little bit about what ERPfixers is. We connect you with all SAP experts to obtain quality immediate solutions for you. ERPfixers consists of thousands of SAP freelancers globally and all SAP modules who are ready to help and assist with their knowledge in SAP. We offer an online platform, a SAP optimization assessment, material ledger, S/4HANA transitional roadmap, and then cost transparency reports. If you'd like more information, please go to www.erpfixers.com. So introducing Ashish, he is a qualified finance and costing professional with more than 2 decades of industry experience in the SAP finance and controlling space. He has provided solutions in SAP Controlling, including product costing, material ledger, and cost center accounting. He is based in Chicago, USA, where he works as an independent SAP FICO consultant, and he is the author of First Steps in SAP Controlling. It's available in English, French, and Portuguese, and expert tips to unleash the full potential of SAP Controlling. I'm going to go ahead and give it over to you now, Ashish.
Great. Thank you, Jessica, and thank you, team, for all those who have joined. Thanks for your interest. So we'll quickly go over the topics that we want to talk through today. The first one being the FinSC ledger, which is the new transaction code introduced with S/4HANA, where we configure the ledger and currency type. We'll look into the details. Basically, it's one that replaces several of the existing transactions. The next one we'll look at is, what does this statement imply that SAP Material Ledger is mandatory with S/4HANA? Several clients have kind of got sometimes confused, sometimes got scared or freaked out. There's no need to be scared. It's, all within the normal functionalities of SAP. So we'll talk through the details of that piece. And many of you may have also heard that, cost elements are now part of GL account. So what exactly does it imply, and what are the implications, and what does it mean for our day-to-day finance and controlling transactions? And again, as a part of this webinar, it's expected that, most of the folks have some basic understanding of what S/4HANA is, and the main focus is going to be on the configuration changes and design overview on important aspects. The 2 big important design changes that have been brought in are the functionality or ability to post cost of goods sold in financial accounting by cost components, and also the next one around the production variances. Now, in the past, they were only posted in the controlling side, but they were never posted on the finance side. So that's something that SAP has allowed us to do. The last one we'll look at is the account-based COPA versus costing-based COPA. Again, we are referring to the profitability analysis, with many other changes that have been brought in, including the ability to post COGS and production variances to FI. The account-based COPA has become the preferred feature, and that's something that SAP has recommended for S/4HANA. And if you're already using SAP and costing-based COPA, there may naturally be questions in people's mind around what does it mean to me? How can I migrate easily? So we'll touch upon some aspects of that as well. Let's look at the ledger and currency setup. This slide that you're seeing here is more of an overview of currencies in various modules, whether it is FI, CO, COPA, or the material ledger part. Our focus for today's discussion is going to be the 2 boxes that are highlighted in red. One is the OB22, which is the additional local currencies in for company codes. That is the ECC setup. And then the one on the extreme right is on the OMX2 part, which is around the defined material ledger type. Now, OB22 is obsolete in S4HANA. We have to use FinSC ledger instead. So FinSC ledger has many more features compared to OB22, and that was part of the reason it was made obsolete. Yet it is still just available as a display. So we'll look at the screenshot in the upcoming slide. And then when it comes to the material ledger side, when we define the material ledger type, OMX2, it is still available in S4HANA, but the default material ledger type 0000 is no longer available. It's something that will be, have to be configured separately. So we'll look at that in the next slide. So basically this additional local currencies OB22, when we go to that screen, we'll get a message that use transaction FinSC ledger to edit currency settings. Yet it will still be available as display only mode. So what you see on the right side screenshot is basically those company code currency 10 and the group currency 30 that is configured in this example. So this company code 1710 is denoted in US dollar in the US currency in the company code, and the euro in the group currency. So this setup is available still as display, so no issues with that. But where it becomes more interesting is in the next screen, where we look at the FinSC ledger. This is the new transaction that I highlighted. This is where the configuration for currency ledger and currency conversions is done. So let's understand some of the highlighted boxes on the right. So 0L ledger. I think most of you must have, who are using new general ledger, may already be aware of the 0L ledger that was introduced with new GL. If you're using classic GL, you probably not using that kind of a setup. It's basically GLT0 and other tables. But this ledger 0L that was introduced with new general ledger is still available, and it also is by default created as a leading ledger. And you also here look at the terms like ledger type, that is standard ledger or extension ledger. Now, extension ledger is something that was called as appendix ledger in the past. It's now being renamed as extension ledger. It's very much similar to the parallel ledger, just that it only gets the delta postings, as in the postings that you make explicitly to an extension ledger. Now, there was another session that Paul conducted, Paul Ovigele, who's the founder CEO of ERPfixers. He conducted a session a few weeks back around prediction ledger and simulation ledger. So those are basically types of extension ledgers. What they basically allow you to do is, if I'm looking at 0L and 2L, 0L being our standard base ledger and 2L being our parallel ledger, 2L posts everything over and above what 0L posts. So which means there is duplication of data. That's been addressed with the extension ledger, where it allows you to say that, I will only post the data that is relevant to extension ledger. But when you are reading extension ledger, I will take the data from underlying ledger and display it. So in this example, for ledger JS simulation, the underlying ledger is 0L, which means that it is only going to read data for 0L over and above JS while reading the extension ledger. So that's the advantage. It's again compressing data and so on. There is another field around extension ledger type, whether it's a simulation ledger or a prediction ledger. Again, there are many other features and functionalities, but when it comes to the original ledger setup, this is the place. Yeah, so that's something that the team has to keep in mind while designing the S4. Now, of course, those topics come up only during the initial design phase or migration phase, but something that we need to be aware of as features. Yeah. So let's look at the next slide around the company code settings for the ledger. So for ledger 0L in company code 1710, I have currency type 10 and 30 that are defined. Now you'll tell me that yes, this is very much similar to OB22. Absolutely, this is exactly the case. Yet it's important to note that there are 8 freely defined currencies that are allowed in S4HANA, and that configuration can only be done in this particular spot. And that's the piece that we are trying to highlight here, that over and above our OB22 display, the actual configuration will happen in FinSC ledger. Now question is, you really want to use those 8 freely defined currencies? Possibly. Is it something that you had in your earlier system? No. And that's where the question comes up, that do I need those additional currency types? Is this something that has value? For greenfield, we can do a lot of things, but for migration programs, we have to think through the design aspects carefully. There are also fields around, exchange rate type and the currency conversion in terms of what source currency type will be used and what is the exchange rate type that will be used. Again, this is also similar to what we have in OB22. But there are other integration parts with, CO, asset accounting, and so on. Let's look at the currency type setup. Now, most of these are, standard defined currency type 10, 30, 70, the ones that are highlighted. There are also setups, settings on the right side, which speak about whether this is a global currency setup or whether you can change it by company code. So as an example, for company code, for currency 30, you can define it by company code, whereas 10 is kind of global and it's applicable to all the company codes. And then the next one is around the currency conversion, global and company code level. Now, there are certain currency types that are global in nature. You can't change the what source currency type will be used and what will be the exchange rate type. Those are always defaulted as M. But when you look at the company code specific currency settings, you can define and say that, hey, I don't want to use M rate, I want to use a certain other exchange rate type. Or I don't want to use translation date, I want to use posting date or document date for that purpose. Those are the setup options that are available. Again, this is a very high level overview. The main takeaway here is that this is a new transaction, FinSC ledger. You'll also realize that the 8 KEM, which used to be the parallel currency setup in controlling, that is also kind of now integrated here. So that's another big piece to be looked into. Yeah. So let's look at the next topic, material ledger in S4 HANA. Again, as we discussed, a lot of clients have got a little confused with the feature, material ledger has been made mandatory. So what exactly does it mean? So as we all know, in ECC, material ledger is optional, which basically what they mean is they're talking about the actual costing functionality for the actual cost of periodic unit price. There are other features, of course, around transfer pricing, which some clients have used, but the majority use is around the actual costing part. And many times we use that term interchangeably. When we say material ledger, we actually mean actual costing. And when we are looking at actual costing, which we know is a sub portion of the material ledger functionality. So when we look at the what is mandatory part, there are two main features: price determination 2 transaction based and price determination 3 single or multi-level. Now, again, single multi-level is what gets us the actual cost, and price determination it records transactions for each material and then allows us to get, maybe let's say transfer pricing or some other functionality related to that, or parallel valuation. But the actual costing piece is what is available only with price determination 3. So I think those who have worked on material ledger know that when price determination 2 is being used, you don't have to close material ledger CKML CP, the closing cockpit, every month. But when it is 3, you must close each material every month. Otherwise, you can't use it for your actual cost calculation. That's one of the requirements. So when we talk about what is mandatory in S4 HANA, it's actually the price determination 2. But the actual costing is still optional. So now if you're looking at a client who says that I'm not using actual costing today, do I have to use it tomorrow? Answer is no, you don't have to. Only if you see value in arriving at actual cost, then you can use and activate price determination 3. Otherwise, continue to use price determination 2. This also does not mean that you have to, close your material ledger CKML CP every month. It's something that, SAP has provided as an additional feature it's still something that you don't want to use, that's fine, but it's available readily in the sense. And what is the rationale behind all this? I think many of you must have heard the term around universal journal, which is the table AC Doc A, or sometimes also referred to as AC DOCA. Uh, that AC Doc A table is the main primary feature around the original design of S4 HANA Universal Journal, which is trying to get us a single version of truth. Now, in the past, we always had, in the past as in ECC, even today, we have multiple modules, sub-modules, and tables, right? And there's always a challenge to do the reconciliation. So when we are looking at material ledger data, whether it is posted to FI, whether it is posted to CO or COPA, and there are reconciliation, and all that is now being addressed through Universal Journal. And that's where SAP says that, okay, if you are trying to get material level information, that will be available in AC Doc A. And then if you are using actual costing, then that is something that you have to use through material ledger functionality, the actual costing functionality. So transaction based information is stored in AC Doc A, but the single multi-level or price determination 3 is stored in ML Doc and ML Doc CCS. ML Doc CCS is for cost component split, and ML Doc is for the main material information. Now, MatDoc is yet another feature improvement where, if you're talking about MKPF and MSEG tables, those tables are now replaced with, I should not say replaced, enhanced with MatDoc. That's the other feature. So again, it's mandatory only for the transaction based or the parallel valuation. If you're not using parallel valuation, still that information is available. The idea is to get better reporting and automatic reconciliation. Right? The next one around CKM3, it has reduced number of columns for price variances. Now, a lot of clients may say that, oh, I'm losing my single level, multi-level price variances. Understood, but when you look at the overall other features, that the cost component split view, it has been integrated with the main view of CKM3. If you recall, we have to toggle or switch between price determination structure and cost component view. So that's something that you don't have to. The cost components are available on the right side as additional columns. So I believe that's a good feature that SAP has introduced. We'll move over to the next slide and look at the material ledger type. We spoke about OMX2. So the top slide that we are looking at is the ECC portion, where the material ledger type 0000 is available. And there are also columns for currency translation from FI and CO currency type and the, manual piece. Now you can use 0000 or set up other ones in the ECC version. But then when you come to the middle portion, middle slide, which is the OMX2 in S4 HANA, you see the 00 is not available at all. And also the columns for currency translation for FI and CO, they are grayed out. They are, I mean, you can display it, but you can't change it, which basically means that you must set up a manual currency translation. Manual currency translation by setting up a manual material ledger type. So in this example, 9300 is shown with additional detail where it says the currency, company code currency 10 and company code currency 30 are defined as the currency translation. Now, even if it is coming automatically from FI, we have to explicitly highlight and say that, yes, I'm going to use 10 and 30. Now, this is one way to, integrate the FinSC ledger setup that we did earlier, and then this setup here. So on the one hand, OB22 is taken away. It's replaced with FinSC ledger. And on the other hand, OMX2, we have to explicitly define the currency type or material ledger type for the currencies. The idea is to ensure that both are in sync. And then again, a lot of care has to be taken in order to make them both in sync, right? The other feature around material ledger is the closing cockpit. The number of steps have been reduced. So on the left side, what you see is the closing cockpit from ECC. On the right side, what you see is from the S4HANA side. The ECC side, we have single level price determination, multi-level price determination, revaluation of consumption, and there is one more feature which some clients use, WIP revaluation. So those four are now combined in one single step called settlement. And you'll also notice that the selection, determination sequence, or determined sequence are now kind of renamed. Selection is same, but we call it preparation and not the sequence determination. So that's one difference. And last step, as we know, mark material prices is optional. I think that's that continues to be the feature that is available even in the past. But post closing is what drives the accounting postings. So that doesn't change. What changes is the settlement as one single step in place of several other steps that we had earlier. Okay, let's look at the next one. Cost element now part of GL account. Now, I think those who have used SAP in the past and have used controlling are aware that KA03 is the transaction code for display of cost elements. But with the S4 HANA, cost elements are now created within controlling, and it's not only the secondary cost elements, even the primary cost elements. So 2-3 things. On the top right corner, you'll see there's a new field called GL account type, where apart from balance sheet and expense income, there is a primary cost and secondary cost as a flag or a field available, GL account type. Plus the cost element category is now maintained in the general ledger. So where in this example, we see cost element category 42 for assessments is already configured on this particular account. What this implies is that KA01, KA02, KA03, or KA06, they now point directly to FS03 and FS00 transaction codes. So even when you try to get in, it points directly to this one. It also, sometimes may create some additional advantage in the sense that today in your current ECC setup, you may have two different sets of people maintaining GL account cost element, or even if it's the same person, you have to remind that person explicitly, hey, please create a GL account for this new P&L account, or rather, when you're creating the new GL account for P&L account, please also create a cost element. You have to remind those people. Now we don't have to, it's all within one single data element. But yet you have to also remember that we assign the right cost element category here. Yeah. And what this may also mean is that several team members have asked, oh, what happens to cost element groups? Are they also gone? Do I have to use something else? So answer is no, cost element groups still remain. And then another extension of that could be that what if I can post a direct accounting document to a secondary cost element? The answer is no, you can't do that. You have to post it through the controlling transaction. So if you're looking at activity confirmation on a production order or a process order or an internal order, you have to use CORK, COR6N, and KB21N. You can't post an FB50 or F-02 journal entry directly on those secondary cost elements. That's important. Why is it done that way? Because we want to still retain the integrity of the functionality of the controlling module. So an assessment transaction has to be done through KSU5, and a distribution transaction has to be done through KSV5. Yet the data is automatically reflected in FI. And we look at one example of assessment that is coming up. But it's important to note that it doesn't mean that when we say that GL, when cost element is now part of GL account, your controlling functionality is lost. It is still available. It's just that SAP is trying to integrate it in a little better way with financial accounting. And we'll look at one example in the coming slides. So while we are on this, it's important to note that this particular feature of real-time integration from CO to FI is obsolete in S4HANA. So if you try to look for this configuration in S4, you'll not find it. So basically, you're looking at, um, uh, why was this real-time integration required? Because in CO, you could post through multiple cost elements, secondary cost elements, but in FI, it's always reflected with one single account, right? The COFI recon account. And that was the reason why this entire real-time integration was necessary. But with S4, it's already built in. There are other setups that need to be done to ensure that the controlling document type is configured. But as far as this real-time integration is concerned, it's kind of built in. So let's look at an example of COFI real-time posting in ECC. And this is an example of assessment where, on the first top right corner, we are seeing a controlling document where the secondary cost element 70010 was used to assess cost from one cost center to another, 45,000 euros. Now the middle screen or middle screenshot is the one which reflects the same document on the financial accounting side. And you'll notice that it uses account 4999998. And where is this account coming from? It is coming from our setup of COFI real-time integration, which you typically set up in transaction OBYB or OK17. It's to be set up by CO transaction. In this example, KZPI, RKIU, and RKL. RKL being activities, RKIU being assessment. Here, the same account is identified. So if for some reason you had different account identified for each CO transaction, it would be possible, but yet it would still not reflect the secondary cost element of 70010 on this on the financial accounting document. So what we also call it, this account is nothing but an in and out account, right? So it basically should net to zero for all the postings that have been done in controlling. The financial accounting reflects the net amount to be zero, but a lot of clients have struggled to find the source of this information. Now source is always in CO, and we can't have a very easy way to find this answer, and that's where the S4 HANA's functionality comes in play. So the next slide, we are looking at the assessment posting example from S4, where two different secondary cost elements are used. So the controlling documents look similar, that you will have a sender receiver and a secondary cost element. But when we look at the financial accounting document, it reflects each and every account in the same set of line items that were used on the CO side. This is a very powerful feature. So this is where the advantage of cost element being part of GL account comes in a big way, that you don't have to reconcile, go back to CO and see, oh, what was the source of this transaction. I believe this is a very powerful feature. And this is exactly the reason why we don't need the COFI real-time integration. Why? Because it's already embedded within the master data of the GL account, because it has the secondary cost element category 42 in this case, which is available in the accounting document. Yeah. Checking on the time. Okay, so the next feature we want to look through is the cost of goods sold, also known as COGS, posting by cost component in FI. Now, when we do a post goods issue, as in movement type 601, sale to a customer, that time we know that the cost of goods sold entry is posted to a COPA. That's what most clients use, standard SAP delivered. Some clients had even introduced it at the time of billing. You can configure that. However, what happens is the accounting entry in financial accounting goes to only one account, saying that this is the cost of goods sold account, but it does not tell us the breakdown of the cost components. And this is one reason why a lot of clients have used costing based COPA, where you can post the difference or post the details or breakdown of cost components in COPA. With this feature, you can post that breakdown in FI, and this feature is available with S4 HANA. Of course, it is optional. You don't have to use it. I had one client who said that, well, this is a good feature, a good functionality, but I don't want to track my cost component breakdown in financial accounting. That's fine. I'm happy with the total number. That's okay. But I do believe this is worth a look, given the powerful feature that you can get, as well as you can evaluate if I'm getting this detail in account based COPA, then do I really need costing based COPA? That question needs to be answered. So this configuration setup in the, here is the path. It's kind of a bit hidden. It kind of sits within materials management, integration with materials management. So one may think that, oh, it might be somewhere under cost components, but no, it is under materials management. So that's one learning that, you have to look through the menu path and find the right spot. What we have to do is we have to first create a cost splitting profile, identify the source account, and this source account is nothing but your uh, GBB VAX account, which goes to the cost of goods sold. And then further down in the menu path, in the target accounts, you have to identify which account will be mapped to the cost component. So in this example, I have mapped 3 accounts to 3 cost components. For the cost component structure E2, it basically then identifies the cost component breakdown from the material master and then populates the data to those accounts. So how would it look like from an accounting document point of view? So top left corner, we have a 601 movement. So this is nothing but a material document with its financial accounting documents listed. You'll notice 2 documents are posted, 29 and 30. 29 is the one on the top right, and then 30 is the one on the bottom right. And of course, there are controlling documents posted. So the first document that you see here has the debit cost of goods sold and credit inventory, which is the traditional standard feature, not much of an issue. This is what you also see today with reference to the post goods issue document. However, the second document that ends with 30, is the one which shows the breakdown of the cost component. So what you'll notice is this first line is nothing but a reversal of COGS that we had earlier. In the earlier document, that 1540 euros, that amount is reversed, and now we have the detailed breakdown of each of the cost component. Now, when you go to the material master, it will also match to the same number. That's the idea, that the breakdown for the quantity sold has to match to the amount posted here. So in other words, when you look at this cost of goods sold account, the traditional account that is for GBB VAX, that account will be net to 0, but then we'll have the details of the breakdown by the cost component in the financial accounting. So remember, for this, you don't have to go to costing based COPA in S4. You can get it in your financial accounting document itself. Now, to correlate this to how it is done in ECC is this one. In ECC, there's just one document, credit inventory, debit COGS, and then the COGS amount just says cost of goods sold. There's no further breakdown in financial accounting. If you want the breakdown, you have to go to COPA. And that's what the right hand side screen shows. It says material, overhead, and all types of additional cost that goes in. But the idea is to say that to get the breakdown, you have to go to COPA, and that's what they have addressed now with S4, that you don't have to go to COPA. You can find that breakdown in financial accounting. So again, a very powerful feature worth taking a look. Optional, but should be utilized if you want to get rid of costing based COPA. Then this is one feature that is a must. Okay, let's look at the next one. Production variances posted in FI by variance category. This is kind of linked to the previous one. Previous one was more on the standard cost of goods sold by cost component. Here we are talking about the variance category. So there is a similar setup. where yeah, before that, let me back up. What happens in ECC? We always bundle the variances and post to one account, price difference account, PRD, PRF account, and that post to FI. No issues with that. But the analysis of variances is done on the controlling side, which always, confuses people and says, oh, for that I have to go to controlling, and then there is some orders with work in process, some orders are completed, and kind of creates confusion and a lot of analysis. Companies have spent hours, at times even days, trying to reconcile these numbers, and that's what you'll notice S4HANA is trying to do: minimize reconciliation, or if possible avoid reconciliation altogether. That's the main requirement, that's the main idea. So how do we post these variances to financial accounting? Again, the menu path in configuration is similar. It's in integration within the GL side, where we have to say that first create a price difference splitting profile and assign individual variance categories like input price variance, input quantity variance, all the way till scrap, all 9 of them, and then assign a target account. Now, in this case, there's a one-to-one mapping for all accounts. Now, you can say that, I want to summarize some of those. That's possible. But the very reason SAP has allowed you to, the power is in reporting, right? You can do real-time reporting at runtime, and you don't have to wait for, some batch jobs to get over, or wait for BI to give you the data. You can run these reports at front end with in-memory computing, as they call it. So there is no need to summarize technically from requirement point of view. So you can have individual accounts. Now, we can imagine that today, when we are posting variance for one order to financial accounting, it's posting only one line item. In future, it will post 9 line items. Same with cost components. In the previous one that we saw, we have, let's say in their example, 3 cost components. So basically, you're looking at 3 additional lines, or 4 if you were to look at the reversal. But what if you are using 40 cost components? You're possibly looking at 40 additional lines coming up. And that's where you have to decide that if we are looking at the details in financial accounting, do you want to summarize them on cost component side or on the variances side? That is an option. You don't have to. Just want to make it easy for your reporting. This is how the production variance split will look like in S4HANA. So what you'll notice is the first 2 lines, GBB and PRD, they are standard. GBB is nothing but change in stock, and PRD is the price difference account. So this is the PRD PRF posting to one single account, and that will be immediately followed by a reversal. And then it posts the 2 line items for the price variance or the production variance that were posted. Now, in this example, there was a total variance of 48, of which resource usage variance added up to some 48.79, and remaining variance added up to some 9 cents. So those are the 2 accounts that are used, the one which ends with 60 and the ones which ends with 110. But the idea is to get details of that breakdown. Again, this is also an optional feature, but if you're looking at detailed breakdown of variances in financial accounting, this is the place to go to, and this is the place to configure. In contrast, how would that have looked like in ECC? This is the example. So in ECC, there'll be always one line item, that income from price difference in this example, where it just posts total variance to one line. That's it. Breakdown, go to COPA, costing based COPA, and that's what this picture is showing. So the middle one is the settlement document with price variance, resource usage variance, and the OPPV. I think this is other price or output price variance. Yeah, output price variance, which is more of a rounding, and that's what we see here. So this difference of 1023, to analyze this, you go to costing based COPA and find the details. So looking at the next one, around the profitability analysis in S4, this is where, looking at the previous 2-3 features that we looked at, where we looked at the cost element is now part of GL account. production variance can be posted in FI. Cost component breakdown of cost of goods sold can be posted in FI. With all this, you are looking at, possibility of using the account based COPA with more confidence, with more, tools available to you. So again, if we look at the history in ECC and even in the older version of R3, costing based COPA had those advantages over account based COPA. And that's why costing based was the preferred choice for majority of the clients. I've seen many clients who have activated account-based COPA purely from reconciliation point of view, nothing else. And some have said that, no, we will do a reconciliation with FI itself, no need for account-based COPA, why to duplicate? Which is fine. But reconciliation becomes a challenge. But then with S4 HANA, the limitations of account-based COPA have been addressed when you look at COGS split or the production variance split or realignment. Realignment is yet another powerful feature which, I believe effective 1709 or 1809, I don't remember, is now being offered in account-based COPA. Now, what does realignment mean? You have characteristics, you have made some change, let's say your product hierarchy change or your regional organization structure has changed. For marketing staff, you want to realign your profitability segments. That could be done in costing based earlier. Now it can be done in account based also. Now, so with all those features coming in, we definitely want to say that account based COPA has more advantage and features. Plus, from whatever SAP literature you may read or whatever conferences that you may hear SAP speakers speak about, they are basically giving the direction that there'll be no much development in the costing based COPA. They are asking all clients to move to account based COPA, and rightly so, because S4 has given all those advantages. Plus, using account based also avoids you reconciliation effort, right? That's the idea. So that duplication of two sources and then FI and GL are stored in different tables, all that is gone. Our universal journal has everything. That's the main idea. So then now comes the question, what if you are already on ECC, want to migrate on S4 HANA, you are currently using costing based, what do you do to use account based COPA? So when you're doing a switch over, account based is automatically added. Now you are at a decision point. Do I activate costing based or not? Now there are various approaches to this. Many clients have said that, okay, I will, do a cold turkey from day one and not give costing based COPA. That is an option. Yet another option is to activate costing based COPA also, use it for maybe, let's say 2-3 years, so that you are, understanding the need, understanding the way the data flows. And then finally, when you are comfortable with account based COPA, think about deactivating at a future date. That is one option. The other option several clients have thought through is, oh, if I am going to move to S4 HANA in the next 3, 4, 5, 7 years, what if we activate account based COPA now, so that we have built history and we have also built, comparison between our costing based and account based COPA. That's also an acceptable feature. There are several clients who have asked, oh, can SAP allow me to transfer or restate costing based COPA into account based COPA from history point of view? Now that's where it becomes a bit complicated. There is no standard feature available, at least as yet, which allows you to convert from costing based to account based automatically. Most clients have said, okay, we'll do some sort of customization wherein we'll try to build history from costing based to account based even before migrating to S4 or after migrating to S4. But those custom tools are, you have to think about, whether you need that information or not, or if you need, how are you going to build it? That's where there is one tool that, ERPfixers and WinShuttle have come up with a collaborative tool. And you can find some information on this on the ERPfixers website. There's a blog post, and I believe there is a webinar also on this, or webcast on this, which basically gives an option to do that kind of a customization in a little, more automated way compared to trying to build it from scratch yourself. So I encourage people to look through that and see if it is going to make sense for you. When we look at this setup, left side is ECC, right side is S4. So again, on ECC, costing based is preferred. Account based can optionally be activated. And in S4, account based is default, but optionally can activate costing based COPA. Now, some clients may say, oh, what if I don't want to use COPA? That's fine. I think that is true even in ECC. Even in R3, I have seen some clients who have used FI and CO, but not activated COPA because they don't have that business requirement. That's possible. So from that standpoint, there are many permutations, combinations, but what we're talking about here is the most widely used or common or preferred method. This is one slide which I tried to put together to do a conceptual explanation. So what you have on the left side is the costing based COPA features in ECC and S4. The middle screen or middle portion is the account-based COPA in ECC, and the rightmost is the account-based COPA in S4. So if you compare the first and second, costing-based and the account-based in ECC, you'll notice that first and foremost, you're using value fields in costing-based, whereas here you're using accounts, right? That is one feature. The other feature is when you look at net revenue, it's both making both the same amounts, yet the sales deductions is available as one-to-one mapping of value field to account. However, there are two accounts that map to the sales revenue. So this is a very important fundamental feature in costing-based COPA, that the value fields are combinations of several accounts, right? It's a summary. It's not one-to-one link. And then the other piece is around the cost of goods sold, that if I have sold goods worth 1.38 million and these were the four value fields that had the breakdown, in financial accounting, we only get one picture, 1.38 million cost of goods sold, no breakdown given. Same way with production variance, if you have three value fields here, you just have one account for production variance, just 20,000, there's no breakdown. Now, when I deduct the fixed cost and arrive at the net margin, the amounts may still be same, yet the level of detail is not. And that is primarily the reason why a lot of clients have not used account-based COPA in R3 or in ECC. But now let's look at the extreme right box. We discussed that account-based COPA now supports breakdown of cost of goods sold in FI, which means that the 1.38 million detail of cost of goods sold is available in FI, in account-based COPA. And same way, the breakdown of the variances of those 20,000 is available in account-based COPA, in FI as well as account-based COPA. So what this basically means that all the features that we had in costing-based COPA are available in account-based, at least from these two main features point of view. Plus, you do have the detail of the sales breakdown. You don't have to summarize it like how it was done here. Remember, there's always a restriction on value fields, 200, right? You can't have more than that. But when it comes to accounts, you can have as many accounts as possible, right? So that is one important feature that the team should be aware of from the overall data flow point of view. And this is the main advantage of with S4HANA, the account-based COPA is the feature to use. The next slide is, similar depiction of, this one is purely the ECC comparison. And then the next one is the S4 comparison, that whether you use costing-based COPA or you used account-based COPA, your answer is going to be same. Then why not use account-based? That's the main argument that we have to look at. And I think it's a very valid argument and something that most clients will find value in and see if this is something that meets your needs. I think this completes those 6 topics. There are other transaction codes that I would like to highlight. That those who are in a manufacturing setup and use WIP variance and settlement, you're very much aware the resource-intensive transactions of WIP variance settlement like KKO, KK, a queue mainly on the mass side, and same way individual ones anyway, not much of resource, but variance KKS1 and CO88, at times they take so much of time to run those reports. You have to run parallel processing, and you have to archive data, close orders and whatnot. Now in S4 HANA, the transaction codes that are available for them are suffixed with H. So KKAOH, KKS1H, and CO88H. Those are optimized to work with S4 HANA structures. By the way, if you're using VA88, as in sales order costing, then VA88H is also available on similar lines. So again, a lot of advantages. One another feature that I didn't have a slide for, but since we spoke about cost components, I would like to highlight. I think most of you are aware that there's a limit on the number of cost components we can have, 40. And with 1909 version, that maximum limit of cost components has been increased to 120. I believe this will be a huge win for clients who are kind of at times constrained with the 40 limit and they want more breakdown. So one example that I always like to give is, let's say you are a coffee producing company or distribution company and you want to track your coffee from the source. You don't have that luxury today, maybe because of the way the cost components are structured, restricted at 40. So you have to say that, okay, Robusta, one cost component, and Arabica, another cost component, and then others are devoted to other types of cost components for conversion and for other purchases. But now with this new setup of 120, you can define coffee Brazil, coffee Vietnam, coffee so such and such country, what type of beans that are coming up, Arabica from several other countries, and so on. So by source you can find out and then have the details. So tremendous advantage from procurement as well as finance point of view. Some key takeaways on the next slide, which speak about, you know, what we looked at. FinSC ledger, that's the transaction, new transaction, which, you know, I think a lot of us will keep going to all the time to look at the overall setup. And we also looked at the material ledger, mandatory. Again, you don't have to worry. It's something that's available only for actual costing. If you're not using, you can decide, okay, it's optional. But then if you're using actual costing today, you want to continue to use it. We also looked at cost elements embedded in GL accounts, a lot of advantages as well as, you know, implications on the controlling side from master data as well as the data flow point of view. COGS and production variance details in FI, again, optional features, but very powerful. Highly encouraged to use them, and we looked at the account-based COPA as the preferred solution. Have a couple of slides for resources on the S4 HANA Delta for CO configuration. This is a book that is being launched in the next few weeks, published by Espresso Tutorials. I had the opportunity to write this book for them. And then the next one I want to highly recommend is the material ledger in S4 HANA, functionality and configuration. Paul Ovigele of ERPfixers wrote this book. It's available on SAP Press. Very detailed, very thorough, and highly recommended for those who are trying to find more details around material ledger. The next one is an e-byte by SAP Press, introducing profitability analysis by Ravi Ravipati. This is a bit dated, 2016. So when this book was written, the realignment portion was still not supported in account-based COPA, but now we know it's supported. But yet what I liked about this book was the overall flow and the logical explanation. One another advantage is it's an e-byte. E-bytes are usually, you know, 100, 120 pages, similar to Espresso tutorial books, which are between 150 to 250 pages. If you're looking for a quick read, those are the ones. If you're looking for detailed information, SAP Press usually goes 500, 800 pages. But again, you know, very good content in each one of them. So depending on what you're looking for, you have a lot of good information available. And last one is an SAP note, which speaks about the technical changes in the material ledger with actual cost. The next one is a kind of a picture of our book that is being launched in next few weeks. These are the main features, key changes, customizing updates. So what we look through today are also available in this book, plus there are some other features that are highlighted. There's some overview section on core data services also. And then these are the other two books that I wrote earlier. They are kind of ECC centric, but when you're looking at the overall flow and concept, they should be able to help. The first book is more of a beginner's book, available in English, French, and Portuguese, as Jessica highlighted towards the initial introduction session. And the second book is more for advanced tips and tricks. I think that should bring us to the questions. So Jessica, do we have any questions? How are we doing on time?
Yes, Ashish, we've got a couple of minutes. We've got 2 questions posted so far. I just want to let everybody know that if you have any additional questions at the end of this presentation, I have sent a chat to everybody. You can email your questions to jcarson@ERPfixers.com. Okay, Ashish, so our first question is, what is the purpose of the checkbox parallel accounting using GL accounts in FinSC ledger?
The checkbox, okay, let me see if I can go back to that slide. That way we can show this for the benefit of all users. I think you were looking at, not this one. Yeah, this checkbox, right? Parallel accounting using GL account. Now this is usually to be defaulted, and again I need to double check, but this is the one that allows us to use the cost elements as GL accounts, and then I can, validate this and confirm back to the group. As Jessica highlighted, the questions will be posted online. So we can confirm that. But as far as I know, this is, at company code level, we are saying that please allow me to use GL accounts for parallel accounting. So you'll get with more details. Yes, Jessica.
The next question, Ashish, is for those who are not using Material Ledger and while migrating into S4, do we need to do any additional configuration or master data changes? And do they need to be considered other than just activating the Material Ledger?
So if I understood correctly, the Material Ledger is actual costing is not being used, right? In that case, there will be no additional setup required. Basically, when we convert from ECC to S4, system will automatically put the price determination to 2, transaction based. Now we have to activate it to multi-level, single multi-level price determination 3, only if you're going to use actual costing. So in summary, I would say if you're not using actual costing, there's no additional setup required. You just have to, you'll start seeing few differences on the way the material master is set up on the accounting one view, where you'll see the transaction based indicator for the material master.
Awesome. Thanks, Ashish. Once again, thank you so much for joining us today, guys. We were pressed on time for another question. However, just as a reminder, you can send your questions over to me at jcarson@ERPfixers.com. Thank you guys so much. I hope you all are staying healthy and safe. Ashish, we appreciate you sincerely, and we're so glad that you took the time to give this presentation for everybody. It's very informational. We've got a lot of great feedback coming in. So keep a lookout for our next webinar coming up next month. Thank you so much, guys, and have a wonderful, beautiful day.
Thank you. Thank you. I enjoyed speaking with all. Thanks, Jessica, for giving me an opportunity.
Absolutely. It was a great session.
Thank you.
All right. Thank you, guys.